I was reading an article the other day about Americans and investing. And well, it turns out that at least half of us out there, or 40 some percent, really don't have any investments of any kind. The rest of us, a good percentage, only have the 401k, for instance, that our companies provide us with. And savings are even worse. I guess statistics are showing that most Americans don't have enough money to survive for about 2 weeks if they're out of work. Now, this is all statistics. I see it out there. It's whatever it's worth. But I definitely know from personal experience by talking to people day to day that investing is not a strong suit in the American middle class. That's for sure. And everything's changed on you. In case you haven't noticed, in the last 10 years or so, after the Great Recession of 2008, everything changed. I mean, and maybe you grew up in a world, and I know I did, or your parents grew up in a world where, you know, you can go to work with a company, get a pension, get vacations, and they take care of you maybe for your whole life. Maybe you have one job in your whole life. That happened, you know. I knew people who used to work for automakers and steel mills and stuff like that years ago. Well, those days are gone. I mean, you still get a job with an automaker, I guess, but as far as whether you're going to be there for the rest of your life, probably till just the next layoff and they close another factory. The last 10 years have really very much been the time of the entrepreneur. And of course, there are middle-class entrepreneurs, definitely plenty of them. On the other hand, I think most of that section of our economy tends to look outward towards other people to say, give me employment, I need a job. Those days are not completely over. You can still get a job, you know. But it is not the same as it used to be. The American middle class is shrinking. I wouldn't want to say it's dead, but it is definitely shrinking because the industrial jobs and types of good paying union jobs and stuff that used to support all that, they're really not there like they used to be. And so this is a time when you really got to grab your own bootstraps, yank on them, and if you want to see something happen, Washington ain't going to do it for you, okay? You're not going to see the changes that you need in your economy to make you happy and viable in this world coming at you from the outside as much as we once did. Jobs are still there. We have pretty good employment, but a lot of people today are way underemployed. And many of them are holding multiple jobs on top of it. I mean, this really stinks because, you know, having a job's a good thing because we all need money, and you need money to have power in our economy and do things. But truthfully, working for a living your whole life, it's a downer. It's a downer. It's a no-brainer, man. I did it for most of my life. Now I've been back and forth across the fence in many different ways, working for other people, working for myself, not working at all, creating my own businesses, and so on. I've been around the block a couple of times with that, and well, as I say, this is definitely a time when you're in charge of your own economy, you'll be doing really good right now. I mean, what I'm posing is those of you who do not have investments in the stock market, I am encouraging you to open yourself an account and become familiar with what this is all about. There aren't enough people in the center of our economy that are really invested in that market. Right now, the rich are the ones that have their money stuck in the market because they know you don't work for a living. You invest your money and you take the money that comes from that. You know, better yet, you make your money with other people's monies. You know, that's how the system really works when you've got it to your advantage here. Definitely, you get an advantage in the economy that you did not have when you were just wage slaving every day working for somebody. The day you begin to put money away and start to sock it into the stock market so you can begin to invest it and watch it grow. Now, I know there are a whole lot of you out there that are going, but I don't know anything about that. It's so complicated, and I'm sure there's a whole lot of you out there that are still in the hangover from the Great Depression that goes, oh no, the Wall Street, the market is scary. You'll lose your money there. Somebody told me that, Well, that's BS too. That's not really true. Cool, you could be a complete idiot and you can put money in the market and you can lose it all overnight too. That's very possible to do. But just to help encourage some of you, to give you an idea of what I'm talking about. Now, I am what you call a contrarian investor. I'm almost never out there when everybody goes, oh man, the stock market's wild. Oh, you gotta put money in the market. People are making money in it. That's when I sell. I don't usually buy very much under the kind of bull market. That's what this is called. And it's been the longest run bull market that I have ever seen in my life. And because of the fact that it's the longest run bull market, that it will soon enough become a bear market. And it might even end in another recession. I don't know what's out there, but we definitely are getting ready for a time to go through an economic correction in a capitalist society where we tend to believe that endless growth is what it's all about. I mean, if you're a CEO for a company or you're making the figures for the next quarter for the company and you tell them, oh, we're going to lose money next quarter, they're going to go, heck with you. It's always endless growth if you've ever had to project figures for companies. And most places will not accept the idea that it's going to go down. Well, because of that, it does go down. It has to go down, and it can't grow endlessly. And so that's what we call a recession or a reset or whatever it is, where things have to draw back in again so that they can then turn around and grow again. And it looks like endless growth, but it's not. It's going... It's what the economy does. That's its nature. It's normal. And you'll hear people out there, oh God, put your money in gold. Put your money in gold. It's going to come to an end. The world's going to collapse. And all that. Well, I very seldom experience fear, period. But when I do experience fear, it's almost never over things that haven't happened yet, And you can rely on the fact the economy will draw back. And that's a good thing. Because, as I said, I am a contrarian investor. I never go out with a pack when they said, oh, look at the market's hot. I wait until everybody else is jumping out of the windows on Wall Street when they think the world is going to end and they are selling everything madly to liquidate what they have. I usually wait until the confetti settles and the dust comes down. And when it looks like things have finally stabilized after one of these resets, 2008 we had one, okay. I do what I call bottom feeding. It's contrarian investing. I enter the market after everybody has sold all their stuff for next to nothing sometimes. It's so sad to watch people do this. It really is. And so then I begin cherry picking. I'll go into the market and I'll pick on big blue chip stuff, Ford, Edison, all these great stocks that have built our country, the foundations of our economy. I buy them for a bargain basement at that time. Now, as a good example, for instance, Amazon, which is, one of the, it's kind of a crossover between a .com and a retail. It's both. But Amazon is, again, one of my favorites. I don't like shopping. If I can do it from my computer, boy, you better believe, and let the UPS guy come down the driveway with it. I do it all the time. Especially here in Hawaii. It does make stuff cheaper for me here. And the Amazon stock that I currently have, which I've probably bought it at a couple different times, but in general, my Amazon stock has done 3,455% increase. I picked most of it up in 2008, and so 10, 11 years of holding that stock and basically doing nothing but just sitting on this Amazon stock, I've made myself a small fortune. I could basically buy everything I ever wanted from Amazon for the rest of my life and never have to spend my money on it per se. I'd be spending the money I made by investing in their company. And so, again, that was a contrarian investment. Amazon fell to next to nothing. I spent, I don't know, between $25 and $55 a share to buy it. Last I looked, we were cresting $2,000 a share, the 1,800 something, I think. Anyway, 3,455% increase in just barely 10 years' time. Doing nothing. This is the point. This is the point. I did nothing except watch it. That's it. I keep my eyes on what's going on. But I didn't have to work for that. That's a lot of money, and I didn't have to work for it. Google. No one. I love Google. Google loves me. The AI over there at YouTube, Google, and one of the reasons you guys see me all the time, the AI thinks I'm cool. They likes me. It puts me up in preferred spots on the web, and actually a lot of the money that I've made later in my life here has been because of Google, YouTube. Mostly because the AI that runs those search engines, Bill has what they like. They treat Bill real nice. They put me in preferred spots and so on. He calls in more subscribers. I get bigger paychecks from him all the time. But the indirect income from people who will see me on the web and will come down here, and so on, and buy stuff from me. So it's one of my favorite stocks. And so again, I did bottom feeding on Google during the 2008 crunch. I have not bought a share of it since, although it did what they call split, where I had one share. I ended up with two shares somewhere in between here. But the Google did 1,675% increase in a 10-year period. This again, a share of stock has a heck of a value to it. That's a lot of money. What did I do? Just picked it. That was it. Another one I like. Starbucks. I don't usually drink Starbucks coffee very much, but I will. For me, I'm just into caffeine. Okay? I feel that I have three kinds of blood cells. There's red ones, I got white ones, and then there's a brown one. The brown one's caffeinated. Without it, I fall flat on the floor like an empty balloon. I invest in caffeine. I got investments in Monster Energy drinks and, anything that's caffeinated. I totally believe it. And caffeine has made me a lot of money. It's been a very good investment. People love caffeine. We need it, Starbucks is a good example. There is just a coffee stock, and it's not really very expensive either for the value of the stock. Starbucks picked up somewhere across the last 10 years. I don't remember exactly, but a 322% increase on it, So, that's pretty good money, especially if you put $1,000 on it, Another one I like, Visa. I see the future of money as basically being digital or plastic, not paper, and so Visa is a good investment. I picked it up some years back when it was an IPO. It means an initial public offering when it first comes onto the marketplace. I grabbed it at the IPO price, which was quite low. I don't recall right now, but under $100 a share. Well, now it's gone up 1,387%. Again, I done anything? No. I just watched it. That's all. Ford, though, is another one in a different sort of a category, too. And Ford doesn't have a lot of value. It usually runs out somewhere between $4 and $10 a share. It's typically about between 6 and 8 is really normal for Ford. Kind of swings back and forth a little bit in there. And it never goes anywhere. I have bought and sold Ford so many times over the years. But what it does do is it pays one whopper of a dividend. And the CEO has said they're going to keep that dividend flowing until at least the next recession. Now, I don't know how many of you have money in a bank account. I have some banks. I have money in banks. You need to have liquid cash like that sitting someplace. But you don't make any money on a bank account anymore. There's no interest on those that's worth even calculating. It's sort of a joke. It's just more of a safe house to put your money into. Till you know what to do with it. But Ford, on the other hand, pays a 6.5% dividend. Top that in a bank. And because that stock is not very volatile, it just doesn't go up and down very much. It remains rather stable. If you tend to pick up Ford shares when they're lower, like I got my last batch at around $6 a share, and then you turn around and you sell them when they're higher, and in the meantime collect the dividends, you make a lot of money. And dividends are part of a stock that I love. Dividends are like pennies that drop into a coffer every day. They just keep coming. You don't have to do anything for them. They're not work. This is just money that comes in because you were invested. And so every quarter they're going to pay you 6.5% on a Ford share. That amounts to quite a bit. Now, that is my encouragement to you to show you some of the experience I've had with this and the reason I believe in doing this. And this is nothing new for me. I have been in the market for over 40 years. And I've seen it go up and down and up and down and up and down. And the one thing it always does is it always goes uphill. I don't care whether there's a correction, a recession, or a total economic collapse. A stock that's been bought 10 years back, if it was properly picked, is here today. That's just the way this works. Now, if we suddenly go into recession and it drops, well, you're not going to sell it now. No, that's the time you buy more shares. If you were planning to sell those shares that you had accumulated, right now is the time to be selling them, or maybe within the next year or so. Generally, election years usually are high markets. The markets are usually rocking. They're more bull at an election year. Also, we have what we call a Santa Claus rally, and that was December. And towards the end of every year, with only one exception that I can recall, there is always a rally on stocks, and prices will drive up on things. And so it's a great time. That's when I sell my dogs. When I have something that really hasn't been moving, I sell it during Santa Claus rally. I usually either make my money back or make a little bit on it, and get rid of it at that time. You sell when the market's high, you buy when it's low is the best advice I have to anybody. As far as how do you pick a stock? This one, I guess, for folks is one of the hardest. It's actually fairly simple. In my opinion, I tend to follow the same strategy that Warren Buffett follows. Now, Buffett is a well-known financier who's made one whole heck of a lot of money by investing in the market. And so following his example, you really will hardly ever go wrong. And then, Buffett, he invests in what he knows. For years, he would not invest in digital technology, even though I was hot on it, but he wouldn't. He was into railroads, utilities, and things that he understood at his age, And so that's a smart move. Now, he has moved over. They own Apple and other digital stocks today. Okay, but he held out for a long time on .com stuff. He just didn't understand it, so he wasn't going to go into it. Well, in my portfolio, I follow pretty much the same exact philosophy. I buy what I know and use. I use Amazon constantly. I love Amazon. I have no complaints about them. I think I got great customer service. I get my stuff shipped here for nothing because I'm a Prime member and blah, 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 blah. But I like them. I use them. I know them. I know all there is to know about Amazon. If I want to look up and find out, what are their financial records and so on, I can do that. That stuff's available through your broker houses. You research it even on the web, Yahoo or whatever. There's plenty of sites that you'll be able to pull up that kind of information if you want to look at, the dollars and cents behind a company. But, I originally got into Amazon when they were still a bookstore. Was my first investment when I saw they were moving into retail. And I said, okay, that's the Sears catalog of the 21st century. Because it ain't going to be paper anymore. It's going to go on a computer, blah, blah. And, well, I was right. Now, I didn't take a rocket scientist to figure that one out. On the other hand, had there been a number of different competitors at the time trying to do the same thing, well, I'd have invested in all of them probably, especially the ones that I used and knew. diversification and spreading your money out is very important. But, to pick on things that are an intimate part of your life. Maybe you've been using them your entire life and you know all about them. I'd invested Gibson guitars if they were weren't a private company, but they are. I can't. I have invested in some of the companies that sold them over the years, but then they got bought up by the Germans too. So, but anyway, things I know and use, that's where I put my money. I'm very comfortable with that because I think I have pretty good judgment when it comes to an item, or a service or whatever it is. Now, that's one way to invest, and it's a very safe way. Pick on what you know. If you use products by 3M a lot, you like them, that's a good stock. I own it. I highly recommend investing in it. It's got a fair dividend. It's had some pretty good growth in the last 10 years, too. It's just an example. If you use 3M stuff and if you like their packing tape or their glue or whatever it is they make, invest in their company. You're going to be spending money there anyway, so you may as well be making it back. When I used to use gasoline in automobiles, and particularly in California, oh man, every time they thought they could gouge California to get more money out of a barrel of oil, they'd make sure that it was at least $2 a gallon more, in California than it was in Kentucky. That's for sure. I used to get so angry about it, and I never invested in oil as a young man because I thought it was dirty business, didn't like it, wars for oil and so on, But finally, when I got stuck so many times at the gas pump in California with absurd bills, I changed my mind on it, and I began investing in oil. I don't like oil companies in general. We don't think the same. So what I did was I invested in oil trusts, not the companies, but the government trusts that actually hold the oil, where it's sitting under the Gulf or sitting in Alaska or it's sitting in Canada too. I own Canadian trusts. And so that way I don't have to worry about the business end. All I own is the deposits. And these usually pay really good dividends. They're real good. Oil stocks are good at dividends. I own several of them. I've lost money on some because oil fluctuates badly sometimes. But I can tell you that while living in California with some of the oil investments I made there, I never spent one penny of my own money on gasoline the whole time I lived there for 25 years because I used the dividends from my oil profits to be able to run my car. So I let the oil company pay for my gasoline. So I suggest investing in what you know and use. But another way that I invest is I speculate. And so, for instance, right now we have a number of different companies. There's Boeing, there's Sierra Nevada Aerospace, and there is SpaceX currently, who are all working on competing to come up with a way to get NASA into space. So, I got Musk and all the guys there that are working on that stuff. One of them, the Sierra Nevada's got a space shuttle design actually, and the other two, Boeing and Musk, are working with capsule stuff. And so space flight is becoming commercial. It was at one time a government thing, and you could take a look and say, okay, in World War I, most aviation was government at that time. But afterwards, heading into the 20s, aviation became a commercial operation. It's still got a government aspect, but it has a major commercial industry developed out of it. We're going to see the same thing happening here with spaceflight. And right now, you're at ground floor. You're like you're in the 1920s with spaceflight today. As far as, most of the companies that are doing this, or a lot of them anyway, are not even public yet. They're privately held. Now, they will probably go public, and some of them have. Well, Boeing, for instance, is one. You can buy shares in. Well, right now, they've been beat down pretty hard because of the 737 MAX, and their shares have declined. although they have a lot of other business. And if they get the contract with NASA, it's going to really have a lot of good things to say about Boeing in the marketplace, probably, but there's several competitors. I'm putting my bet on Musk that he's going to be the one to pull this off, because he's got that just kind of genius thought process going on there. And I think he's already been hauling stuff to the with his rockets for NASA already. So he's got his foot in the door over there. Now, you can't buy SpaceX at the moment. Eventually, I'm sure you will. He put Tesla out on the market, and I own Tesla. It's about the only way, other than investing in some of the people that make parts, like you invest in the rocket engine makers. Okay, they're out there. You can get onto that stuff. Richard Branson, Virgin Galactic. That's the Virgin Airways. For years, he was the CEO and owner there, but now he's aiming for space. He's got his planes that will do this, and he's probably going to be part of space tourism. There's the Gateway Company, for instance, that is currently working on designs for a space hotel, landing site for spacecraft and so on, that'll be in orbit around the Earth. It's going to be that kind of stuff that I think we'll see that his company will really be aiming at. If you get several $1 million and you want to fly outside the atmosphere, Branson's going to do it for you. And he did go public back around November, I think. I picked up shares of the Virgin Galactic stock. It's called Space something. I don't recall right now. But I did that in November. And so in about 2.5 months, that stock went 68% on me. Beat that. I mean, I've seen stuff go crazier than that. I didn't exactly expect a stock that I picked up to go that high that quick. It's more than double what I paid for it back in November. Doing 2.5 times your money in a couple of months, invest in the stock market. That's the way it goes. And I will be putting my money on almost every one of the reasonable ventures that are going to do space flight, orbital space stations. Jeff Bezos, he's the guy who owns Amazon. Of course, he's working with Blue Horizon. Is that it? I think. Anyways, Horizon. It's he wants to do a moon base thing. Probably a moon hotel. He's working on getting to the moon. Musk, well, he'll accommodate anybody that wants to go into space, but his whole program is Mars. I don't know if he wants to be the monarch of Mars or what, but he says he'll have 1 million of us up there by 2050. Now, for a lot of you listening to me, you're going to be around. You're going to be around. And so I would certainly put money on Elon Musk's venture. He'll do it. Have a couple of fall downs and here and there. There'll be problems involved, but he's going to do it. I know he will. And you'll make money right along with him. My Tesla stock has been like that. It was a crazy idea initially, and I think the only reason I invested in that was because it was in Fremont, and I do believe in investing locally is something I like to do. But it was also, I love electric cars, And so I put money under him, and I'm glad I did, because it's fat these days. It's quite fat. It goes up and down depending on whether they think his car ran over somebody or set fire or what happens. So you speculate too. If you want to make money, you speculate. This 3D printing is out there. That's still a little bit part of the future. I had money on it 15 years ago, and so I made a little bit there. Streaming video services, for instance. I don't know how many times I bought and sold Netflix when I was sure it had hit the peak. It's really rocking, and I dumped it. It turned back around. It kept climbing. I bought it again. Then I'd say, it must be the peak. I dumped it. I've had Netflix 3 or 4 times. And each time I buy it, I make profit on it. I just keep buying that. Lately, I've gotten sick and tired of the whole program. I think I bought some Netflix shares maybe about 8 years ago or something. I haven't touched them. I just ignored them. It's Netflix, you know. There is this issue. I think it's a fallacy people have that you need a lot of money to invest in the market. That's where you'll go wrong. Okay, because my first investment, $100. That was the first money I ever put in the market. That got me started. You have to have enough money with a broker to be able to buy some stock, you know. But I mean, a lot of these brokers today, like Ameritrade, for instance, they don't charge fees. There's no fees. Yeah, you don't get charged for anything. You make a trade for nothing, even. You know, I mean, start the account for nothing. You know, they're going to want you to give them a check so that they can put some money in it. Otherwise, if you don't fund the account, you can't use it. But you know, there's recommendations. I'd suggest putting in $500 or $1,000 if you got it. It's a good place to start. But if all you got is $100, open yourself up an account. I'd suggest an IRA if you're younger, you know, so you get tax advantages with the IRA. You make a lot of tax advantages if you do it that way. And then you can do your trading inside the IRA, and you're not going to be liable for any of the money you made on that until the day you start to pull it back out, and that'll be the lower tax rate. But, you know, you just open a plain account. Doesn't matter what you're doing, but, you know, put some money into an account and then start thinking about it. You know, who do I use? What do I like? What's my favorite can of soup? I don't know. Do you drink Coca-Cola? Guys who listen to this station, probably not much. But, you know, whatever it is that you do, think about it, you know. You know, if it's been a company that's been around for a while, got a reputation, everybody knows them, they tend to have a good product, there haven't been any real serious issues, then it's probably a pretty safe bet, especially if it's listed on the New York Exchange. You know, this all gets complicated, and I can't tell you everything, but what I can and feel I should tell you is if you want to survive comfortably in this current world situation, I highly recommend you begin learning how to invest, not work for a living. Plus, you know, some of the stuff I show on this channel, you can do it for little or nothing. You know, it's all, I mean, gardening is, you know, usually very profitable activity. But on the other hand, there's a whole lot of other things I show here that you can never even get close to it unless you figure out a good way to make yourself a good chunk of change without killing yourself to get it. It's like, if it seems like it's too expensive, I guess you just need to make some more money, because all the good places and all the good stuff costs money. That's the way it is, you know. And very little other than love, companionship, and all those spiritual, esoteric things that we can't put in the jar that you can get without money that are worth having. You know, the rest of it, so many of us are ruled by our economies. We get divorced over debt. We drive ourselves crazy and depressed and get sick with stress over unpaid bills and mortgages and stuff. It's not a good way to live, and you don't have to live like that. I've been there. I've done that. I don't want to go back. Never go back. No. Aloha. Y'all hang loose and, hey, invest the next $100 you got.